Welcome to Cascade Conversations. Join the team at Cascade Partners and their network of trusted advisors as they work to demystify details, terminology, and strategies in the world of acquisitions, divestitures, and financings.
I'm John Doehr, Managing Director with Cascade Partners. I'd like to welcome you to another edition of Cascade Conversations. I'm here this afternoon with Tom Walker, a senior partner with WalkerInsight, economics consulting firm focused on agriculture. We are here to talk about the global state of the agricultural industry and specifically how the world plans to feed 10 billion people by the year 2050. Tom, welcome.
Thank you, John. Senior partner, actually the senior partner is Tom Walker Sr., who is, in fact, yes, my dad. And he founded our firm in 1969 and involved himself long before I was at all professional in the agricultural industry. I think he had judged it back in the 70s, at least, it was 40% of business in our Federal Reserve District in a fairly underserved community.
Your work is centered on both kind of data mining, economics, both holistically and particularly as it impacts the farming industry. What are some of the key developments that you've seen either through COVID and coming out of COVID? Of course, we've got significant inflation that impacts pricing and commodity costs for farmers, but what are some of the key issues you're looking at today?
I think a lot of factors contributed to making agriculture in 2022, and it's nationally true. We focus mostly in Minnesota, so I can speak very specifically there. The most profitable year on record since 2012, which itself was kind of on the heels of the ethanol boom, where the mandates from a few years prior created a major bull market in corn, and that ran ahead of cost ability to catch up. So we had some wonderful net profits in 2012. 2022 bested that number, and you have to go back basically to much older than the data sets to find the last time farming was boomed as it did. It's tempting for us to see corollaries to the 1970s, which were a very profitable time in agriculture.
Okay. And can you tell us a little bit about land prices, how they've soared to their current levels, how that's impacting the farmer, and kind of how that's going to impact the future of the industry as it relates to what is the best use of land? We all know labor is a big problem for all industries today. Is automation coming onto the farm? And then as you look at the supply chain, how is technology impacting the whole supply chain?
Farmland, as recently as the mid-90s in Minnesota was about $1,000 an acre. And I think Minnesota it's one of the, not the major I-state corn producer, but certainly a decent proxy for row cropping in the U.S. So farmland was maybe 1,300 acres. Recently it's 97. I'm looking a little bit from memory. Depending on the rumor mill and what sales are booked there, and I'm aware of an appraisal that was just conducted that placed quality farmland at $10,000, $12,000 an acre in some of the more productive regions. It is very, very high, and it is still high in spite of the fact that since last year we've seen some real major upticks in interest rates. And I mean, you have a very powerful negative correlation. So you talk about farmland and what it's done since the 90s. Certainly interest rates until recently have been on a very distinctive downward trajectory that tends to boost asset prices. Additionally, we've seen technology, in particular hybrids and also chemicals and hybrids, pushing corn yields up really miraculously almost, and that plus ethanol mandates and whatever else you want to throw in the mix from the COVID era, whether it's concern over Ukraine production or whether it's just what the M2 did in the period and chasing after commodities and goods and services, which inevitably happens. Inflation, the first effect on farmers really do benefit. And I think that's really driven, I can only call it speculative land price.
Tom, so as we look at how do we create resilient food production going forward, there's a lot of new technologies, a lot of money has come into what they're calling the agri-food tech space. I think it's over $200 billion in the last since 2012 and $30 billion in 2022 alone, although that was down from 2021. As you look at concerns over supply, of course, ESG, climate, carbon, and then new technologies, Internet of Things, precision ag, how do all those factors influence what a farmer is thinking about in terms of what is best for their business, and then how the consumer should be thinking about where they should go and buy their products?
Farms, it's obviously a very full-time job just to keep up with technological advancement, and it results in a really high capital spend in order just to keep up. For sure, it's interesting. What I find that in farming is their capex essentially accounts for every single dollar free cash flow that comes in every year, which in some ways is a bit disturbing. You'd like to see a little bit of payback over 30 years.
So it's very capital intensive.
It is exceedingly, and keep in mind in terms of land ownership, farmers own perhaps a quarter of the land that's under management. So there will be an interesting shift. I'm maybe getting a bit of feel from you, but in terms of where the capital resides, as the population ages out, that involves farmers retiring, landholders passing their land holdings on to the next generation.
Yeah.
Sometimes the next generation does not want to be in a land management situation, and so they're looking for professional third-party management, or they're looking to sell it and cash out. So that whole landlord and farmer relationship is probably going to evolve in the next 10 years. And if you can guess, it's going to be more professional.
So that's interesting. An interesting segue. One of the new issues that have come into agriculture is advanced technology greenhouses or controlled environment situations where you're growing product indoors, correct?
Yeah.
And we've seen a lot of money in the venture capital space go into these vertical farms, which seem to have had mixed success in the last year. Some are still going, but others have certainly failed. What is the situation where the farmer has to decide, I can keep doing this outdoors, but I have these environmental considerations, I have the concerns with the weather, versus potentially going to an indoor environment?
Yeah, it's obviously animal husbandry has moved a lot of it inside anyway. Hog production exclusively inside, dairy, the actual milk product, sort of interior. So much of agriculture is still producing very commodity level, undifferentiated product. Number 2 USDA yellow corn.
Right.
Soybeans, a lot of it's going into seed oils. Some of it's going into biofuels. A lot of corn goes there. So in terms of the higher quality food question versus where most of our acres are being devoted, it's hard to say where that's going to evolve. So some of the more interesting, more direct to consumer food items, honestly, I sort of hypothesize have been pushed aside a little bit.
Okay. Right, but you're still trying to get to that low cost of production, right? Like I know it's a little different space, but we've done a fair amount of work in the horticulture space where they're not growing food so much as plants and trees and shrubs, but I know in that sector, the H2A program, which is a program where workers are brought up from Mexico in a very organized system, has been a great way for some of those companies to increase productivity and efficiencies in their various sectors, which is important as pricing has been under pressure with COVID, and consumer demand has kind of waffled a little bit. So it's still about being that low cost producer in the farming sector, in agriculture in general, correct?
Yeah, that's not a question. If you can maintain quality and cut costs, now that is a bit of a trick because people in cutting costs, I think sometimes it's a bit knee jerk, and they end up undermining both quality and their productive profile on the long term. But that's definitely there. I regard and they don't see enough of it. One of the primaries of opportunity, whether you're crops or animals or both, is definitely organic farming, just because it's more distinctively, it's differentiated, it's consumer driven, it's not dependent on subsidy or other forms of economic management that you're going to get.
Right. Okay. And one area we haven't touched on, but I know it's critical in what you do. It's important in a lot of different industries that we see, and just becoming more and more important every day, are data analytics. Can you talk a little bit about how you mine data and how you use that with your clients to help them improve their operations?
Agriculture is really data rich. I don't know who isn't anymore, but in a sense, because of the government involvement, there's public data sets. So you really get a good sense of what the economic reality is. So in trying to understand how you're performing, we all want some basis of comparison. And so I'm able to access that data and give my clients some real insight. Basically, looking over the neighbor's shoulder. Now, which is kind of big brother, I guess, but I mean, anyone can do it if they want to. And perception and reality are kind of divergent there. What people sort of assume, the nature of the rumor mill and just driving around and looking what is going on in agriculture, ends up being very different if you get behind the numbers. It's a challenging industry. Margins are razor thin. Capital costs have been low, but that has driven asset prices up very high. And now if we're into a transition where we're going to see asset prices tail off and capital costs rise, it's always the people, and this is the biggest thing I'm doing with my clients using the data, is what's the nature of that transition? Don't get caught out. I mean, the stupid example, except for the people are doing it, don't buy $12,000 an acre land in Minnesota that presumes that you're always going to have 220 bushels of corn at $7.
Right.
And 3% cost of funds.
Right.
Have they happened? Yeah, they just did. Right.
Yes.
Are they persistent? Well, they're gone.
Okay.
And looking at history, so to what extent is history controlling when you get behind the numbers for these prices to remain? What other things have to be true, and do we think that those assumptions are reasonable? Usually we find the answer is no. We have to assume, or at least be prepared in our financial arrangements, that corn is going to be cheaper. We're not always going to get 200 bushels. Interest rates, in fact, are 6, 7, 8%, which, if you take a broad sweep of history, is kind of middle of the road.
Okay.
So the short tour we're looking at.
Okay, great. I think, for our last topic of today's conversation, we're an investment bank. We obviously do a lot of work in mergers and acquisitions. You've alluded a little bit to consolidation in the sector with I think the corporate farms that have come in and acquired a lot of the land. And I know that we're expecting a lot of M&A with the rise and fall of capital funding in the agri-food tech sector, particularly around, as I mentioned earlier, some of the technologies and the vertical farms. There's just going to be some winners and losers, and M&A is going to be a part of that. How can you just kind of speak to consolidation in general in the sector, as it's a finite pie, it's not really growing? I think it was Mark Twain that said, buy land, they're not making any more of it. How do you see M&A consolidation playing a role in the next few years? Farming
Traditionally has been untamable. It's very decentralized. The maximum efficiency tends to be around 5 to 10,000 acres. So I'm working from Minnesota assumptions.
Sure.
Different in North Dakota.
Yeah.
We've seen the most consolidation definitely within animals. Beef, definitely, especially hogs, poultry, dairy.
Yep.
And I'm not sure what to make of some of that, because that's still doing. It's very undifferentiated, not quality driven, not necessarily even consumer driven product. There's likely to be opportunities in land acquisition and land holdings, and actually to be professional holders who are serving the farmers who work the land. I think we'll always see a bifurcation of ownership and management there, but I don't think that $10,000 an acre is a good play based on the current crop mix in Minnesota. If someone figured out how to grow actually really good Cabernet grapes in Minnesota, I think that you'd be happy for 10,000. Although I was at another event. I was talking to a vintner from Central Coast, and unplanted suitable ground for wine production was 25,000 an acre.
Wow.
Plenty, but then fully planted and ready to produce was maybe 40, 50, which you think about the value of production there, and you think about how that compares to 10,000 in Minnesota for number 2 yellow corn.
Right.
Our numbers sound kind of crazy, so I wouldn't tell everyone to rush out and buy ag land and not making more of it. And there's something, a report you shared with me talked about withdrawal of a certain amount of acres out of production.
Right.
And we've gotten very productive. There's a lot of land that can become more productive. There was a theory that was advanced a few years ago, and I'm at least sympathetic or curious about it. It was peak farmland. We're going to see land pulled out of production because of the nature of the efficiency of production is so great.
Okay.
Good. So if you're going to buy it, make sure it's good.
Right. Well, I think what I hear you saying, and what we've seen as well, is that it's a highly competitive sector, whether it's agricultural, horticulture. There's a finite pie. You have to be very efficient in your means of production, and as a result, there's consolidation because economies of scale just lead you to more profits. And so it only makes sense that some groups are getting out of pork and into beef, or out of beef and into other areas. And I know in horticulture it's the same, where it's just more efficient to have larger operations where you can generate economies of scale and increase the bottom line. Well, again, thanks for being here, Tom. Appreciate it. And thank you for joining us for another episode of Cascade Conversations.